Well, stocks opened higher on this Wednesday morning. Let's head to New York now for a better understanding of what's been moving the U.S. markets. Kriti Gupta, markets reporter with Bloomberg News, joining us. And Kriti, you were noting that obviously there's a lot of hope in the air for finding some kind of treatment to COVID-19, and the markets are looking to the news from Gilead this morning. Can you just walk us through what we learned from Gilead?
That's right. So 8:30 this morning, a very eventful few minutes. You did hear from Gilead kicking things off right as we were expecting some economic data, saying that they may actually have some positive results to share on their latest remdesivir trial. Remember, this is a very heavily watched COVID-19 drug. The study potentially, their statement potentially saying that they actually showed a faster recovery time in patients. Now, remember, we are still waiting for more comments from them and from the National Institute of Infectious Diseases as well. So we are still waiting on kind of the progress on that. Nevertheless, you really saw the market take a big bounce off that, and really showing that any headlines here along a potential cure for this disease is very good news for the market. That being said, I will warn you, the flip side of the argument here, this coming from John Authors, kind of a legend over in our Bloomberg opinion columnist side, saying that this actually has a very simple explanation. The market just may be over optimistic in believing that this disease will disappear. So that's why you're having a lot of kind of faith in this company, in this drug, and in this stock. You also want to keep in mind that the stock in particular, Gilead Sciences, ticker GILD, is seeing quite a lot of action. A lot of people kind of going into this stock. So you're really seeing some technical movements in the stock itself, as well as the broader rally. And
you mentioned 8:30. We kind of got distracted by this Gilead story. GDP for the first quarter down 4.8%, and I don't know if that means a lot to some people, but I think that's the first contraction since like 2014. It's certainly the worst print we've seen. You got to go back to the financial crisis more than a decade ago.
That's right. A drop of 4.8%, like you said. The estimate there, just for some context, was between 3.6% to 4%. So really seeing a worse shrinking of the economy than expected. And this was just in the first quarter. Remember, the U.S. economy really started to shut down in the middle of March, maybe early March if you really want to kind of be conservative there. The big hitter in the economic data, though, was the personal consumption numbers. You really saw an estimate there of about a 3.6% decline. We actually got a collapse of 7.6% of a drop in personal spending. So what you're trying to see there is that household consumption is really, really dropping here, kind of underlying the fact that the American consumer, the strong American consumer that's gotten past a lot of the tensions we've had in the past few years with the trade war especially, really collapsing here under this idea of the virus. So kind of pushing us further into recession. This is something that we'll really be watching with the Fed. Remember those comments coming at 2 o'clock, really seeing, well, what else do they have kind of in their tool case? So what else are they going to be doing to potentially help the economy? Can they even be doing anything? All eyes there from the market's point of view will be strongly on those repo operations. How much can the Fed really interfere more, and how much will they really unwind their position? So something to watch there on the economic front.
Don't bet against the Fed, they like to say. Maybe don't bet against technology, because it seems like after Google's parent Alphabet came out with those results that have now been well received, the momentum story of tech is going to be worth watching, especially on another busy day for technology sector earnings.
That's right. This week, really a busy one for the tech sector. And I remember we are talking about a bit more macro, this idea that we're seeing stocks rally on these kind of hopes of reopening, on these hopes of drugs. We're also seeing on the other side, the underlying economic data really painful, expecting more pain here in the second quarter data, especially the monthly April data, as we continue to see a good chunk of the United States really still closed for the most part. Even Google coming out in its earnings call and saying that the second quarter could be more painful in terms of ad spend, in terms of revenue. You're also expecting to hear a lot of that coming out of other companies as well within the tech sector and outside. But what's kind of this dispersion of the economy versus the stocks? And really, it's the tech sector here. Remember, a lot of people, a lot of strategists saying that the best way to kind of play this virus is to invest in companies that have strong balance sheets. And you really see that in tech, where you see this kind of major safe haven play from around the world as we see this demand for cash-rich, liquid, global growth companies. That's why you're really seeing tech rally. But then once again, maybe that's just a temporary story. We really have to see how the sector will play out as we go into the second quarter.
Kriti, thanks as always. Great wrap of what's been happening so far on this Wednesday morning. That's Kriti Gupta joining us from Bloomberg News in New York. And so you've got some positive themes in the market. I was mentioning